Hello guys, welcome back. So now here in this session, I'm going to explain a very important, configurations or setting, that is foreign currency setting. So first of all, we'll see, like I'll explain the concepts and then we'll go for configurations. In configurations also, I'll explain certain very exclusive things, guys, during configurations that you'll never find anywhere. If you talk about the foreign currency settings and all, that is very important configurations, guys, and lots of questions are going to be asked by people during interview. So we'll explain each and everything in details, and easily you guys are going to understand the thing. So first of all, let me explain you like the need of like why we have to configure this foreign currencies and all in the sense settings, and what will happen after configurations, like what kind of benefit you are going to get. So those things are going to be explained. Now I'll quote a very simple example here once again. So say for example, now, okay, I'll give a very simple example. Say for example, we are having rent GL. Okay, rent GL means like, let's suppose Tata Motor has taken like lots of buildings are there on rent. Corporate offices there, several other offices are there in different cities and all, that is also on rent, taken from multiple different what to say, vendors in the sense like builders, right? So builders are going to be treated as a vendor. Now, so every month we are going to receive multiple invoices from different vendors. I'll just, let's suppose I'm quoting some, like example here. These are the amount which we are receiving every month. I'm quoting a very small amount, guys, just for example only, right? So let's suppose these are the amounts. These are the amounts every month we are receiving, like it is getting posted in the form of rent for different office. Let's suppose this is for corporate office, this is for office somewhere in Mumbai, Delhi, right? Now at the same time, Tata Motor is having like operations even in foreign countries also. Say for example, in USA also it's having market. So how they are going to sell the vehicles over there? Generally, whatever the vehicles are getting manufactured here, let's suppose it is going to be transported, and somewhere at central locations in USA, somewhere there will be a depot where like all the vehicles are going to be stored, and from there they are going to distribute to the local distributors, right? So even whatever that area, whatever that storage locations, so-called like depot is there for that, and so like whatever they have acquired over there, that is they have taken on rent. So now here, what is happening, guys? For that, also they are paying rent. Okay, so every month we are receiving, in the sense Tata Motor is going to receive the invoices from the vendor, in the sense the owner of that warehouse, sorry, the owner of that depot. So every month we are receiving invoice, but the owner, in the sense that vendor is going to send invoices in USD, right? So say for example, 100 USD worth of invoice. Now here, if you talk about the currency here, so all these amounts are in Indian currency, whereas, or whatever the local currency is there, that is your company code currency I'm talking about. Now, and this is in USD currency. Guys, if your, what do you say, let's suppose management want to see the report, like overall how much rent has been paid in this particular month, then how to get, guys? If you are going to look at here the consolidated figure here now, so if you are going to check this consolidated figure, so it is going to show you like it's 25,100. But guys, this is not the correct figure. This is incorrect figure. Why? Because these amounts we have counted, that is in different currency, and this amount is in different currency. So if you talk about the value of US currency is bigger than Indian currency, right? Now, so here what is happening, guys? In this case, generally this USD, whatever the transaction got posted in USD, that must be converted into local currency, right? So let's suppose 1 USD equals to 50 rupees, 50 INR. In that case, here all these amounts, I'll just do one thing, I'll copy and I'll paste here. So what is the need of this? I'll tell you. So 100 USD equals to, let's suppose 5,000, right? And it is converted into local currency itself. Now this is the correct figure. It means 30K. 30K. This is the correct figure, right? So here what is happening, whatever the amounts are getting posted in foreign currency, this is the, like let's suppose a single transaction is there. I have converted manually. But if you talk about an organization, several transactions are taking place in foreign currencies, right? And that too, there might be a chances multiple currencies also could be there, or else single currency also will be there. Like it depends upon organizations. Generally, what is happening, guys? If you talk about US dollar, that is called global currency. Most likely, whichever the trades are happening, like customers, vendors from cross-border customers and vendors are there. So to those vendors or customers, what is happening? If we have to make payment, they will say that I accept payment in US currency only, or else they will say that we are going to accept USD, in the sense US currency, like Euro and GBP, like 4 or 5 currencies are going to be accepted. So now USD is also, of course, like global currency, guys. So most of the, like if you talk about the if you check the exchange rates and all, so every currencies are going to compare with USD itself, right? So now, so what is happening, like let's suppose if we are having vendors from different countries, they are accepting payment only in USD. So whatever the invoices we are receiving from those vendor, that is going to be posted in US currencies, right? And if you have to calculate, let's suppose we are receiving, like we are having like multiple vendors are there. Some of the vendors are there from India. So let's suppose we have received the invoices in local currency. However, some of the vendors are there from different countries, and we are receiving their invoices in different currencies, guys. So those invoices are also going to be posted. So if we talk about the total payable, what is our total payable? What is our total liability? So this is not the correct figure, guys. Whatever foreign currencies are there, that is must be converted into local currency, and then only you are going to get, then only we are going to get the exact figure, like what is our total payable, what is our total liability, right? So since multiple transactions are taking place in foreign currency, so it is not possible to convert, like whatever transactions are getting posted, manual conversion is not possible. 100 of transactions, 200 of transactions, 500 of transactions are taking place in foreign currency on daily basis. So SAP has given foreign currency setting here. This functionality is there. So if you configure this foreign currency settings, then what will happen, guys? No matter whatever transactions we are going to post in foreign currency, automatically system is going to convert that value into local currency. Okay, so here actual what do you say, posting, in the sense actual amount with actual currency also is going to appear, and at the same time the balance converted value is also going to appear in the report. I'll show you, like so that is going to be pretty clear, guys. It is easily you guys will be able to understand. Okay, now so this is what the use of foreign currency settings. It means if we are going to configure this foreign currency settings here in SAP, then whichever transactions are getting posted in a foreign currency, that is going to be converted into local currency automatically with the help of the configurations. What configurations we are going to do, how to do the configurations and all, each and everything I'm going to explain in details with easy and simple examples, so that easily you guys are going to understand those things. Now there is one more challenge here. Challenge means, I'll tell you. Now let's suppose if you have to, so now here what is happening, guys, how this conversion is taking place. Conversion in the sense, like foreign currencies amount got converted into local currency. So how system came to know that 1 USD equals to 50 rupees? Because if this, somewhere we are going to maintain the price, guys, that 1 USD equals to 50 rupees or 60 rupees, right? Or else whatever your currency is there, I'm not talking about like this INR USD itself, guys. It could be any currency. It could be any currency. Whatever your company code currency is there, that is going to be treated as your local currency, in the sense and whatever invoice currency is there, let's suppose if it is other than your local currency, then it is going to be treated as foreign currency. So now here I said like one, let's suppose 1 USD equals to 60 or 50. Let's suppose I have given like 50 INR. So somewhere we are going to maintain this rate, then only system is going to convert system is going to convert this amount in the sense 100 USD into this 5,000 INR. So somewhere we are going to maintain this rate, right? So now, of course, we have to maintain, guys. We have to maintain this rate, and that rate is going to be maintained in a particular table that is called foreign exchange table. Okay. So now I'll tell you where to maintain these rates and all. Okay. But before that, again, the next question is, which rate are we going to maintain? So now even like you guys also might be thinking, which rate? What do you mean by which rate, right? Which rate means like a single rate only will be there. 1 USD equals to either 50 INR or 60 INR, 70 INR, whatever what to say rate is there that we have to maintain. So I'll tell you guys, no, it's not like that. If you talk about the rates, then I'll tell you. Now, say for example, so here I have put an example of, I have created like whatever the settings are there. I am assuming that this Tata Motor is existing in India. So that is why local currency is going to be treated as INR. If you are going to configure, and if you want, like if your company is located in a different country, so that country currencies are going to be your local currency, and apart from this, other than whatever, other than your local currency, whichever the other currencies are there, that is going to be treated as foreign currency, right? So here I'm quoting example in terms of Indian currency, but you just assume into your local currency, you keep your currency in your mind, and then you just consider this example and all, so that you guys will be able to understand clearly. So now here what I'm saying, I said like which rate we have to specify. Okay, so say for example, let's suppose Tata Motor is there or is like, let's suppose I'll quote an example. As a person, let's suppose I'm in India and I have to visit USA. So what will happen, guys? Right now I'm having Indian currency in my pocket. So if I have to visit USA, I need their currency, in the sense USD, US dollar supposed to be there in my pocket, then only I can spend some amount over there. Indian currency is not going to be accepted over there, right? So what will happen, guys? I'm going to reach my bank, and there I'm going to exchange, in the sense I'll give my local currency, Indian currency, to the bankers, and they're going to give me the US currency, right? So I have to exchange, money exchange, right? So at that point of time, bank will say that if you are going to give me, let's suppose bank will say that, okay, if you give me 54 Indian currency, then bank will give me $1 US. Okay, bank will give me $1 US, right? If bank is saying that you give me 54 INR and I will give you $1 US. Okay, or else in the other word, I'll tell you, bank will say that, okay, if you want to, in the sense here what is happening, guys, we are the buyer. I am having, like, let's suppose my local currency, but what is happening, I have approached to the bank and saying that I want to buy US dollar from you. So bank is saying that $1 US I'll sell you in 54 Indian rupees. It means if you give me 54 Indian rupees, then I'll give you $1 US. It means at this rate, bank is selling the US currencies. You just assume this example in your currency so that you will be having perfect understanding. Now, so here what is happening? Bank is saying that $1 US is going to be sold in 54 Indian currency. So this is the rate at which bank is selling this currency. This is called bank selling rate, right? Bank is selling this US dollar in this much rupees. So this is called bank selling rate. Now, say for example, I went to USA, I spent my holiday over there, and again after that I'm coming back to my native now. So once I came back, still there are certain US currency which is there in my pocket. So now here in India, again USD is not acceptable, guys, in the sense like if you go to local shops and all, they will ask for the Indian currency only. So what is happening, guys? Whatever US dollar is there in my pocket, now once again I have to approach to bank and will have to say that now you just do one thing. I'm having this US currencies and all. So you kindly you'll go for exchange. You'll go for exchange means now you are going to give this US currencies to the bank, and we are going to take the local currency instead of this US currency, right? In the exchange of this US currency, we are going to ask for local currency. So here again, bank will say that, okay, so now you came back with US currency, right? So bank is saying that, okay, I will buy your US dollar. At this point of time, what is happening, guys? Bank become buyer. Earlier, we need US currency, so bank is seller. Right now, what is happening? We have to sell our US currency because I need local currency, so bank is the buyer. So bank is saying that 1 USD I'm going to buy at 50 INR. It means bank is saying that, okay, I'll buy your US currency, but I'll give you a different rate here. If you give me 1 US dollar, I will pay you only 50 Indian currency, right? So at this rate, bank is going to buy the US dollar. So now this is called bank buying rate, right? Look at here now, there are two rates, guys, bank selling rate and bank buying rate. Hope you guys will be able to understand the example. I'll tell you guys, configurations part, it's like it's pretty easy, right? Configurations means like of course, like you need to understand the logic, whatever we are going to configure and all, so those logic you need to understand. If you don't understand the logic, and even if you know the entire configurations also, it's going to be wastage of your time, because you don't know the logic behind that. Simply you know the steps, right? So that is what I'm trying to, whatever example I'm quoting, just make you people understand that yes, this is what the concept, and based on that itself we are going to do the configurations. Again, during configurations, once again I'm going to explain all the things in details, so that you guys will be having perfect understanding. Now here, so we are having bank selling rate and bank buying rate. So now look at here, two rates are there. That is what I said, like which rate are we going to maintain? 1 USD equals to 54 or 50, right? So I'll tell you guys, most of the cases we are going to maintain average rate, because if you talk about the companies are having vendors also and customers also. Look at here, bank buying rate is going to be applicable in terms of vendor. Okay, I'm just typing in shortcut, guys. Okay, this is customer and this is vendor. Okay, so don't look at the spellings and all, just assume that, or else this is customer and this is vendor. Now here, so what is happening? Let's suppose in case of vendor, we are having vendor, and that vendor we have to make payment to the vendor. So your bank account is having, like, whatever the amount is there in your bank account, it is there in local currency only. And if you have to make payment to the vendor, it means we have to make payment in foreign currency, that too in US dollar. So what will happen? If you are going to instruct your bank that I need to make payment in US dollar, it means bank will say that you do one thing, you buy US dollar from us. It means bank is seller, bank is going to sell you the US dollar. So bank is saying that I will sell you at this amount. It means if 100 US dollar is going to be paid to the vendor, then bank is going to deduct the amount from your wallet, in the sense from your bank account. At this rate, bank is going to deduct the amount, and then this amount is going to be converted into dollar, and that is going to be paid to the vendor, right? So in case only if you are having in only vendor, in that case we are going to specify this rate in exchange rate table. In exchange rate table, we are going to specify this 54 INR, right? If you are having only customers, so customers means customers are going to make payment in US dollar, let's suppose, and this US dollar came to your bank account. Now what is happening? So bank is going to reflect the amount into local currencies only. So bank will say that, okay, you just do one thing, whatever US dollars are coming, whatever the payment we have received in US dollar, so we are going to convert this US dollar amount into the local currency, that is like in INR. So it means bank will say that, okay, I'm going to buy your US dollar and I'm going to convert the amount into your local currency. So US dollar, whatever is there, is bank is going to buy at this rate. Okay. So in case of customer payment, customer means our receipt, we are receiving US dollar. Now you are having US dollar in your pocket. So of course, if you need local currency, it means bank is going to buy, we are going to sell it, and bank is going to buy. So bank will buy at this rate. So in case of only customer, what is happening, guys? We are going to maintain this rate. But generally what happens, guys, in most of the cases, you'll be having customer and vendor both. So in that case, we are going to maintain average rate. That is, average rate means what will happen? 54 plus 50 divided by 2. So 52 INR is going to be treated as your average rate. So which rate is going to be specified, guys? Bank buying rate, bank selling rate, bank buying rate, or average rate, right? So which rate are we going to maintain? So this is not your decisions. Why? Because these configurations, these setups we are going to do for whom? For Tata Motor. Let them decide which rate they are planning to, which rate they are going to maintain. Tata Motors knows that they are having only vendors or customers or both. So in case only vendor, this rate is going to be specified. In case only customer, this rate is going to be specified, and customer vendor both, then average rate is going to be specified here in exchange rate table, right? And based on this rate, what is happening, guys? Whatever transactions are going to be posted, system is going to convert automatically these things into your local currency. This is what the concept. This is what the concept. But again, once I do the configurations, there are few more things, guys, that is going to be very exclusive, right? People know the configurations part, but they don't know the logic behind those configurations. And once you go for the interview, people will start asking the logic. What do we mean by this one? What will happen if I'm going to do this configurations? And what will happen if I don't do that configurations? So I'll tell you guys, this impact you can understand only if you're having like perfect understanding. If you understand the logic, then only you are able to respond. You'll be able to give the answers at all. Or else like simply a question mark will be there on your face, and easily the interviewers are going to read it out. And within few minutes, they will say that yes, now you can leave for the day. If you're shortlisted, then HR will get back to you. It means indirectly they are saying that HR will never get back to you. You got rejected, right? So try to understand what to say this logic, no matter whatever the configurations you are going to do. Okay. So now here in next video, what I'm going to show you guys, in next video, I'm going to show you how to do the configurations and all. And again, certain very exclusive things I'm going to explain during configurations also. So it's going to be very interesting session. Each and every sessions are going to be interesting, guys. But again, one by one, all these explanations will be there. So that's all in this session, guys. Next sessions, I'm going to show you practically how to configure this foreign currency settings.